Market Journal, television for agricultural business decisions, is a presentation of the University of Nebraska-Lincoln's Institute of Agriculture and Natural Resources. Promotional support is provided by the Nebraska Farmer Magazine.
Hello everyone, I'm Troy Moling and thanks for joining us today on Market Journal. Here's hoping your July is off to a great start. Let's jump in and see what we've got for you this week. And beginning the broadcast, according to USDA's June acreage report released Wednesday morning, 92.7 million acres of corn, 87.6 million acres of soybeans, and 46.7 million acres of wheat were planted by U.S. farmers in 2021. USDA's quarterly grain stocks report was released Wednesday morning as well. It tallied corn stocks at 4.1 billion bushels and soybean stocks at 767 million bushels. I spoke with the University of Illinois Ag Economist Scott Irwin to get his thoughts on the numbers.
Well, I think the big story, obviously, from today's reports are the corn and soybean acreage numbers. With the boom in corn and soybean prices, the market has been expecting a much bigger acreage response than the March report indicated. And now the June report has confirmed that it's going to be a lot smaller than the market was counting on. And given the small stock situation we're dealing with, that's an explosive outcome.
And Scott, does all that tie into the market surprise that I saw you tweeting about?
Right, exactly. The market on both corn and soybeans, based on the pre-trade surveys that we all have access to, the trade was about 1.6, 1.7% higher on acreage than where the numbers came out. The market was thinking that combined corn and soybean acreage would be something about 182 to 183 million acres. And basically that combined total changed very little from March to June. And I think the really important thing that's happened is even those pre-trade surveys don't always necessarily reflect, in a sense, what I call the money-weighted expectation in the market. And I think the big money in the market had been leaning what I call very heavy on corn and soybean acreage, particularly corn. If you remember, the market really tanked when IHS came out with the number of almost 97 million acres planted for corn. I think that really influenced a lot of people's thinking. And so there was a lot of expectations of a big corn number in particular in this report, and we did not get it.
Okay, so the big question on people's minds is, with the numbers that we're seeing from the USDA, what does that mean for corn and soybean prices?
For the time being, up, 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 up. I mean, we're seeing, corn locked up 40 cents, beans up 90 cents right now. Those are huge moves. Those acreage numbers put a billion bushel ending stock for your projection for corn in sight. And then you combine that with concerns about prospects for yields, particularly out where you're from, in the more of the Great Plains. You put that together with these now smaller acreage numbers and you get a really explosive situation on corn. But the really explosive situation is soybeans. Because basically at the new acreage numbers, and if I use 50 bushels an acre on soybeans, which that may be at more risk than our corn yields because we have, so relatively speaking, more of our soybean production is in the drier areas right now. You put that together, basically if you just take the June WASDE projections for use, and now you lay them up against maybe a little bit lower yield projection and these now flat acreage numbers for soybeans, and the balance sheet doesn't work.
And you alluded to this earlier. How big of an issue is this going to be for meeting soybean demand in 2022?
Oh, it's going to be a huge issue. Basically, tremendous attention is now going to be paid to weather prospects and yield prospects for both corn and soybeans, but particularly soybeans. We're going to obviously be hypersensitive to any evidence that soybean use is being rationed. I mean, we just look at the June WASDE numbers for 21-22. USDA didn't see much, a little bit, but now the market's going to have to run the price up to cut those usage numbers back at least 100 million and probably closer to 200 million.
And before we let you go, let's end things today with any marketing advice or selling strategies that you'd like to tell us about.
Well, here now I'm going to move into kind of an opposite perspective. We've not seen the supply response that the market thought was clearly going to happen in corn and soybeans. And so we're going to have really high prices this summer. But history shows that the supply response will happen. Some of it in South America when they start planting in our fall, and probably next year in the US from these high prices. So we're going to get a very large supply response over the next 12 to 18 months from these prices. History says the supply response will be real, it will be big, but it's usually lagged. I think that's what people in the market forgot. The grain price boom we're experiencing right now, Troy, is still less than a year old. And it takes a little while for to turn the super tanker of crop agriculture to a real expansive mindset. And what that means then is we're going to be setting probably the high prices in the next couple of months, or at least back to the old highs of a month or so ago this summer. So this looks to me like a really great marketing opportunity for both whatever you expect to produce for the 2021 marketing year that you don't have it sold yet, and in particular for 2022. Just as a kind of rough rule of thumb, I like to think about something like that, man, $5 out of the field or however close you can get to it for 2022, we're going to be right there, not far from it after today.
Next week, we'll be joined by Oklahoma State University's Daryl Peel for a look at the cattle markets. And speaking of cattle, Nebraska's producers will soon be dealing with the increasingly hot days of summer. In fact, some spots already hit record temperatures last month. And as the mercury rises, the heat and humidity can do a real number on cattle in the field. Market Journal's Bill Dodd spoke with the Nebraska Extension educator Erin Laborie to learn more about helping cattle cope with summer heat.
The dog days of summer are officially upon us. As temperatures climbed to a stifling degree this month, cattle had a very small window of opportunity to acclimate to summer weather conditions. That means helping your cattle cope with the increasingly hot days of summer will be paramount to your operation. One of the best ways to help your cattle beat the heat is to be proactive rather than reactive when it comes to heat-related events.
Yes, so when it comes to heat stress with cattle, once a heat event has occurred, I don't want to say it's too late, but it's a lot more challenging to implement strategies to help them cope in those situations. And so it is really important to kind of plan ahead and look for some of those heat events that are approaching so you can be proactive in helping them adjust to those temperatures.
Cattle simply can't handle the stress of hot summer days as well as we humans are capable. One very important factor producers should be well aware of is the thermal neutral zone. As temperatures go beyond this upper critical threshold, you may see telltale signs that the heat is beginning to stress some animals.
So the thermoneutral zone is basically that range in temperature when cattle don't need to use any extra energy to help maintain their body temperature. And so for cattle, this is about 32 to 75 degrees. And so when we see temperatures getting above that range, they'll use additional energy to get rid of that heat. And so if you see cattle panting, or if they have increased heart rate or respiration rates, these are all signs that they're likely experiencing heat stress.
Keeping your cattle healthy and comfortable during extreme heat can be a bit of a challenge, but failure to do so could have dire consequences for the animal as well as your bottom line. Beyond the more typical heat-related symptoms, you should monitor feed intake as well. Once the heat has started to impact cattle, they may tend to eat less in order to try and cope with these higher temperatures.
So typically we'll see them go off feed if they're really experiencing heat stress, which ultimately is going to result in less gain. But cattle that are severely stressed, they could die. So we could lose some cattle in extreme cases.
I've always heard the bigger they are, the harder they fall. And it seems the same can be said when it comes to cattle in hot summer days. The bigger they are, the hotter they get. When it comes to keeping an eye on your cattle in these temperatures, you should be particularly mindful of cattle that may be on the upper end of their body condition score, as they may be more susceptible to heat stress than their counterparts with a lower BCS.
Typically, the cattle we see that probably experience the most heat stress would be our fat cattle. So the heavier they get, the harder it is for them to dissipate the heat. Typically, the healthy body condition score for when you're talking for our cows, and that would be around that condition score 5. So we want to see them there in average.
When it comes to heat stress mitigation, there are a number of strategies you could implement. As we stated earlier, staying proactive and frequently monitoring weather reports of prolonged temperatures in the 80s and 90s would serve you well. Furthermore, you may want to avoid working or transporting cattle any earlier than 10 in the morning if possible. However, it's always important to stick to the basics. Plenty to drink and a nice breeze can go a long way.
So the most important thing, and I know it seems like the obvious one, would be making sure they have plenty of fresh water. And because they're going to drink more when it's hot out, and actually they're going to drink about twice as much as they normally would, which can be up to 30 gallons a day. And so sometimes if you just need to put out extra waters or put some water in the bunks, just making sure they have plenty of fresh water. The other thing is wind. Wind is definitely your friend when it comes to heat stress. And so if you can get those cattle away from any windbreaks, or also if you have extra pens available that you could put some of those cattle in just to help them get more exposed to the air movement.
Usually on these hot summer days, when people get hot, we have the luxury of hopping in a shower and cooling off. While sprinklers can be an effective tool for cooling down cattle that are burdened with these high temperatures, there are certainly a couple of considerations to keep in mind before giving your cattle a shower to cool off.
Yeah, so sprinklers can certainly be a good tool. You want to make sure though that has a large droplet size, and you also want to be aware of the humidity level because if it's high humidity, the use of sprinklers is just going to make the problem worse.
If the temperatures we've experienced in June are any indication of what we have to look forward to for the remainder of the summer, we could be in for a scorcher. If that's the case, this won't be a summer of fun in the sun for you and your herd. However, following these tips could make the dog days of summer much easier on your cattle. Reporting for Market Journal, I'm Bill Dodd.
Thanks for that, Bill. If you're looking for more information on combating heat stress, check out some additional resources on the Market Journal website. Next up, more than 57% of Nebraska is dedicated to grasslands and forage crops. The Nebraska Grazing Coalition aims to enhance those grasslands by creating public awareness and education events for landowners. Market Journal's Maddie McIntosh has more.
Whether they're used as forage for livestock or as wildlife habitats, grazing lands play a key role in the intricate ecosystem and economy of Nebraska. The Nebraska Grazing Lands Coalition is an organization dedicated to keeping these grasslands healthy through community outreach and education.
The Nebraska Grazing Lands Coalition is really a state-level affiliate of the National Grazing Lands Coalition. But the long and the short of it is we're a group of mostly cattle producers, grazers, that apply grazing management principles to conserve what I view as Nebraska's most valuable resource, meaning our grazing acres.
One event the coalition hosts is the Summer Grazing Tour, which allows producers to see firsthand environmentally friendly practices in action. This year, the tour took place in northern Nebraska.
in our annual summer grazing tour. We were on the Jessen Ranch near Niobrara, and we were on the Kalkowski family ranches near Lynch, Nebraska. You know, it's one thing to visit with ranchers and about effective grazing management principles and the potential benefits to them, but if they can go see their neighbor that's applied those principles for some length of time and see the advantages, it's an easier sell.
In addition to the events, Ron believes it's important for the coalition to help with setting up management plans as well as working through ranch succession.
Well, historically, the Nebraska Grazing Lands Coalition has worked with landowners, managers, ranchers to understand the principles of effective grazing management to conserve the grass resource longer term. In many cases, those ranchers have set up defined grazing management plans, if you will, for the year. The two ranches we're on today are actually moving the cattle as frequently as 2 or 3 days. And then as the season progresses, those rotations would actually slow down. But that's historically our primary focus. Here in more recent years, we've recognized the concept of generational transition as perhaps one of the huge challenges facing agriculture today. I mean, with the rancher becoming ever older, the question becomes who's going to own and or manage these ranches long term. And we understand that conservation practices like effective grazing management that have been applied by family-oriented operations for years, those conservation practices are more apt to continue if that ranch stays in the family. So we work with that family with generational transition and estate planning to help ensure that ranch can stay with that family long-term and hence continuation of conservation practices.
Reporting for Market Journal, I'm Maddie McIntosh.
Thanks, Maddie. For more information on the Grazing Coalition and to view upcoming events, visit nebraskagrazinglands.org. Next up, Nebraska County Fairs are back. Of course, many county fairs got canceled or altered to youth contest only formats due to COVID-19 restrictions, so the wait is long overdue. So you can expect more 4-H and FFA contest offerings, entertainment, carnivals, fair food, exhibitors, and family fun. The county fair is like a big family reunion for the area, and Nebraskans are looking forward to those big events this summer. You can get a complete list of all the dates and locations of the county fairs in Nebraska in the July issue of Nebraska Farmer. Taking a look at the hog markets now, and USDA's quarterly hogs and pigs report tallied nearly 76 million head on June 1st. That's down 2% from a year ago, but a 1% improvement from last quarter's report. Nebraska's inventory clocked in at 3.8 million head. I spoke with Iowa State Extension Livestock Economist Schulz earlier this week and started by asking his thoughts on the USDA estimates.
Sure, I think you're on point. Numbers were down, but pre-report expectations had numbers down. So I wouldn't say it's all that much of a surprise. Maybe individual numbers, we did see some larger than pre-report expectations or lower, but overall I think they're consistent with our expectations. I will note that numbers were larger than the March 1 numbers. So the breeding herd got slightly bigger, about 15,000 sows. That's about 2%. Market hog inventories, about 750,000 larger, which is about 1% larger.
Lee, what do the farrowing intentions tell us?
So those numbers were below year-ago levels. I think that's consistent, again, with pre-report expectations. Actually, I think they were a bit lower than pre-report expectations. Now, we got to remember, those are best guesses, and so we'll likely see those change in the next couple of quarters, given where those numbers are. But if we just break down June, August, that's been a really large number the last couple of years. So we're going to compare to a large number. So I think even though it was down 4.4% compared to a year ago, I think that's still a pretty large farrowing number, and I think it's pretty true where we're at. If you look at the sow utilization rate, we're at the 10-year average. So I wouldn't guarantee that number is not going to change, but the June-August number seems pretty consistent. September, November, I think we could see a bit of an increase there, just based historical patterns from the first to actual numbers. But overall, I think these numbers are suggesting, we're not seeing liquidation, we're not seeing expansion, we're just seeing kind of producers hold pat where we're at.
And when you dig a little deeper into these numbers, does it indicate a pullback in projected slaughter for the final quarter of 2021?
It does. So when we look at the market hog inventories all the way from the 180 pounds and over down to the less than 50 pounds, that's going to give us our slaughter levels till the end of the year. Well, those were all below year-ago levels, and so if we calculate that out weekly, that's going to give us, I think, for the third quarter, maybe down about 2.9% in slaughter. The fourth quarter, we could be down about 1.4% in slaughter. That would give us an annual 2021 over 2020 of down about 0.6% in slaughter levels. I think the first two quarters of 2022, we could see a bit tighter supplies than we've seen here in 2021.
Can you speak on how the market volatility in the grain markets is impacting producer decisions when it comes to feed costs?
Sure. So we haven't seen this high a cost since 2013-14 in the hog market. And you could go really across animal agriculture for that. What that equates to is probably about $16 per hundredweight or 26% higher costs in 2021 than we've seen in 2020. That equates to about $35 per pig more to produce that pig. So that's why we're seeing such higher costs really throughout the supply chain. Now, when we look at how that's impacted producers' decisions, they're looking at that as saying, well, I'm risk averse to that uncertainty out there and likely going to invest a little bit less. And I think that's what we're seeing bear out in those farrowing intention numbers. Now, you got to realize that the profit part is, we got to also look at that revenue. And so if we benchmark against 2014, we're seeing costs similar to them, but prices actually much lower than then. So profitability in 2014 was maybe $50 a head on average. Here in 2021, we're looking at maybe $19 or so per head profit.
What do you see as the big market movers going forward?
So I'd put it two different ways. I think you have the demand pull inflation. So we're seeing tremendous demand both domestically, highest pork prices we've ever seen. Consumers continue to pay that, as well as the export market. Where exports maybe marginally down from 2020, but 2020 was an exceptional record year. So if we can maintain that pace, that is impressive. The other big market mover is the cost push inflation. Everything's costing more now. You go from feed, but also wages, fuel. You can go down that list. It costs that much more to produce pork this year than it did last year. And a lot of those, I think, cost increases are here to stay.
Lee tells me labor issues continue to trouble these markets. There were already shortages before the pandemic, and they remain a concern. Time now for weather with Nebraska Extension Ag Climatologist and Market Journal Chief Meteorologist Al Dutcher. Al, hope your July is off to a great start. What are you tracking in this week's forecast?
Well, Troy, here we are going up onto the 4th of July, entering the month of July, of course, and we could turn our attention to basically the health of the crops. We've had some decent rains across portions of the state, but we've been being challenged in other areas of the state, particularly in portions of the Panhandle and extreme northeastern Nebraska that's been lying just to the north, unfortunately, of some of the better precipitation. That being said, it does look like more of a general summer pattern that is shaping up over this next week. There are chances of precipitation in here, not overwhelmingly great chances, but there are some chances for some precipitation. And then we start to deal with an increasing warmth as we go through the week, as we see that high pressure that was dominant over western United States start to try to push its way into the plains region. The biggest question going forward will be, how long will that heat last, and will we see a breakdown of that heat like we've seen recently as we've seen troughing actually move into the northern plains. So as we go to the upper air models, we'll show you that basically we have high pressure firmly in control, a weak trough moving across the plains that might generate some isolated thunderstorms, and then of course the low pressure system that's over the northeastern United States. So surface high pressure seen over southeastern Missouri is going to clockwise flow around the high pressure, bringing moisture up the low levels from the Gulf. But because we have a frontal boundary along the Gulf, most of that's being intercepted by that frontal boundary and not allowing the moisture to get up. Now, as we get into 4th of July, we'll see that trough start to make its way toward the east-southeast. Low pressure at the surface of the Texas Panhandle may actually be able to pump some moisture up, particularly in western Nebraska. We may see some isolated thunderstorm activity, although I don't think it's going to be widespread, so it's probably not going to be a washout for the 4th of July. And as we get into Monday, that trough starts to deepen somewhat over the Great Lakes and expand, and high pressure over the southern plains. Low pressure over the southwestern region of Texas will generate pretty good thunderstorm activity, and we might start seeing some convection developing isolated up in the northern plains as this trough starts to deepen as it moves toward the southeast. Low pressure on Tuesday will be situated up in northeastern Montana, and high pressure basically over south central Colorado. That should allow some precipitation to break out. I don't know if this is exactly going to be point on what the forecast is, but it does show thunderstorm activity. And on Wednesday, that trough starts to move toward the southeast, so most of the precipitation that was over the central part of the state, if it is going to form, is going to move over into southeastern Nebraska. This kind of shows up with the radar depiction of what we think will happen on Wednesday morning. Now, as we get into Thursday, we start to see the bigger warm-up. High pressure starts to dominate the southwestern desert region and builds up into the central Rockies. There is low pressure that's indicated, at least by the GFS model, to develop over south central Kansas. But most of the precipitation will remain well east and the warmer, right ahead of the warm front that'll be pushing through. And then on Friday, we see this high pressure expand even farther. So western Nebraska is probably going to be looking at more into the mid to upper 90s, lower to mid 90s across the east. And we should start to see some humidity start to increase somewhat. But a lot of that moisture will be intercepted as we get around the Gulf Coast, where we've been persistently wet. 8 to 14-day forecast indicates that high pressure system will try to shift toward the north from where its position is forecasted, bringing above normal temperatures to all the northern and most of the central plains. And in terms of precipitation, with that high pressure in place, below normal moisture over the northern Rockies, we'll wait to see whether the next trough that's indicated to come out late next weekend will start to break this down. But overall, it looks like hot, moist weather over the next few days.
Thanks, Al. That's going to do it for this week's show. If you missed a story, be sure to download the Market Journal mobile app, or you can follow us on social media to join in on the conversation. Next week, have you thought about leasing your farmland for solar development? We'll tell you how to get started. Plus, Daryl Peel is here to break down the cattle markets. Hope to see you right back here next time. I'm Troy Moling. Thanks for watching, and have a wonderful 4th of July.
Join Market Journal online at marketjournal.unl.edu. You can also follow us on Twitter, Instagram, and Facebook. Promotional support is provided by the Nebraska Farmer Magazine. Market Journal is produced by the University of Nebraska-Lincoln's Institute of Agriculture and Natural Resources.